If you have been trading for more than a year or even like two, and you're still not seeing consistency, you're still not seeing profits, it's because you are overcomplicating your trading. Because the thing is, trading is supposed to be easy. It's not supposed to be hard, you know? You're not supposed to sit on your charts for like 8, 9 hours, analyze the markets, put on 10 different indicators, 10 different like chart patterns, and then take a trade. Trading really comes down to these few things that I'm going to teach you in this video, and I'm going to teach you my personal trading strategy that I use live every single day in the Discord, and I trade NQ specifically. And this is a trade that we took today. I took this trade live in front of hundreds of members, like more than 100 people, and it played out perfectly, right? This was my take profit level. I took my entry here, and pretty simple, right? So here are some key things that you need to know. So first thing first, it really comes down to these two things. And if you can master this, you don't need anything else. All right. So high time frame key level, lower time frame confirmation. Yep, that is the video. I'm just kidding. All right. Keep watching because I'm going to teach you a lot of like stuff, my entry model, the specific entry criteria that I follow, and how I identify my daily bias, and how I take higher probability trades, right? And how I know that this higher time frame key level is going to fail, and how this key level is going to work out. So this is my entire strategy. So first thing first, before I even like think about taking a trade, I start on the daily time frame no matter what. Okay, and I frame my daily bias. I'll look and see what has market done, where it has gone, and where it can go. So, you know, price moves from liquidity to liquidity or from external to internal liquidity. So let's say that I'm checking the daily time frame to frame my bias, and I see that price has taken out the daily high, right? Now, let's say that there is a fair value gap over here. Now, well, my bias is going to be bearish with some confirmations. I'm going to confirm that, okay, my bias is bearish towards this daily fair value gap, right? Because as you know, price always like rebalances the price, right? So we've taken external range liquidity, we tap into internal, right? And let's say that I open the chart on the daily and price is already inside this fair value gap. So now I can say that, okay, the overall order flow is bullish. So I want to be trading with the trend, the order flow, right? Now from here onwards, my bias with some confirmations, of course, my bias is going to be bullish. Pretty simple, right? But let's say that there is no fair value gap inside this dealing range from this low to this high. Well, simply the next target could be this sell side liquidity, right? So we swept buy side, and now the next target is going to be sell side. This is how the market operates. So I'm going to stay bearish until this low is taken out. Simple, right? This is basically how I frame my trade. Let's say that this low is taken out on the daily. Well, my bias is going to be bullish until we take out this high, right? And let's say that we take out this high, and let's say that there is a fair value gap over here that gets inversed, right? And then we have this high over here. Then my bias is still going to be bullish because one, we have invalidated this bearish fair value gap, which has now inversed and turned into a bullish inverse fair value gap. So this should hold the price to the upside. Bias is really simple. You don't need to overcomplicate. And no, I don't have like 100% correct bias every single time, but it definitely helps me take best setups, like literally like the best setups possible. Now, if nothing is clear on the daily time frame, I usually go on to the 4-hour time frame to see if I can find the same exact pattern. So let's say that our bias is bearish. Okay, so here's the strategy. First of all, change your trading view time zone to New York, and we will always be trading. I always trade after 9:30 open New York time. So our trading window period is from 9:30 till 11:30. All right. You don't want to be looking for trades before that and after that. You want to be trading inside this window period. Now, let's say our bias is bearish, right? And we've been dropping and whatever. Well, to frame my trade after the market open, since our bias is bearish, I want to see a 15-minute time frame liquidity sweep, buy side liquidity sweep, right? because our bias is bearish, so we want to be trading towards the downside. Now, let's say that price sweeps out this high. Well, I'm going to look for my entry model after that, but I'm going to teach that later on in the video. But let's say that what can happen is sometimes you will have a 15-minute fair value gap over here, right? And price has like already like broke some structure, for example. Let's fucking do that. All right, let's say that price, broke this low over here, and we have this fair value gap on the 15-minute. Our bias is bearish. So then if price reaches this 15-minute fair value gap, I can frame my trade around that level. And I can target the closest liquidity pools, which would be this low and this low over here. But what about the entry model, right? We need to see what happens when price taps into the 15-minute time frame. Now, number one, our bias is bearish. Price has tapped into a 15-minute bearish fair value gap. Now, the next step is that we are dropping down to 1-minute time frame. Okay, and that's where I take my trades. I trade on the 1-minute primarily, but it can be on the 2-minute, 3-minute, 4-minute, and 5-minute max. And I'm going to teach you why. So the next extra confluence that I look for, and this is not necessary, I use this if my bias is not very clean, but I look for SMT divergence inside or at around like a PD array. This could be a 15-minute high or a 15-minute fair value gap. Now, let's say on NQ, we made a higher high, higher low, and then a higher high, but on ES, we failed to do so. Now that, ladies and gentlemen, that is your SMT divergence, okay? Around fair value gap. But one of them must tap into the fair value gap, okay? Or a key level. This could be a 15-minute high or a fair value gap. Now we are trading after the market open, right? Ignore these timings because we're not talking about this. Just look at this, 9:30, and let's say that this is 11:30, right? So now we are on the 1-minute. We have SMT divergence with ES. Now here's my entry model, and it is pretty simple, okay? Now, I'm looking at this dealing range, right? From this low to this high, and I'm looking for a fair value gap inside this range. So let's say that there is a fair value gap on the 1-minute. Well, I'm going to move on to 2-minute time frame to see if there's a fair value gap in this dealing range, like on the 2-minute as well. If there is a fair value gap on the 2-minute, I'm going to check the 3-minute. Well, if there is no fair value gap on the 3-minute within this dealing range, I'm going to stick to 2-minute. So we always want to be trading the highest time frame inverse fair value gap, okay? And the highest is 5 minutes. We cannot go any higher than that. So now let's say that this is a 2-minute fair value gap. And let's say there are multiple 2-minute fair value gaps over here. Let's say there are 2 fair value gaps over here. We have SMT, we are inside the 15-minute PD array. Now the next step, we are looking for inversion fair value gap. So I'm waiting for price to close below both of these fair value gaps. That invalidates the bullish momentum and validates the bearish momentum. So my entry is going to be here. I'm going to go break even as soon as closest liquidity level is taken. I'm going to take one partial at 1-to-1 risk to reward ratio or 0.7 risk to reward ratio. Depends on the quality of setup. And my final TP could be 1-to-2 or 1-to-1.5. And again, if I have a very clean draw on liquidity, for example, we have, let's say, equal lows resting around here, then I'm going to go for 1-to-2 or simply just target this liquidity level, right? Also, let's go back a bit. Let's go to the 15-minute time frame, right? And let's say that, let's go even like this. Okay, let's say that there is a 15-minute fair value gap resting around here as well. So we are inside a bearish fair value gap on the 15, and then we have a bearish 15-minute fair value gap. Now, as you know, price goes from external range liquidity to internal, and from internal to external. External is basically every high and low. It's called external range liquidity. Every single fair value gap is called internal range liquidity. So now that we know that we have swept the this external range liquidity on the 15, we have tapped inside the 15-minute fair value gap. So the next target could be this 15-minute fair value gap as your draw. This could be your draw on liquidity. But let's go back to where we were. And let's go here. Okay. Now let's say that there are, let's go, you go to 3-minute time frame, right? And there is a fair value gap on the 3-minute. And you check the 4-minute, there is a fair value gap on the 4-minute as well, somewhere around here, let's say. Okay. So you want to stick to the highest time frame and not higher than 5-minute. So let's say that there is no fair value gap on the 5-minute inside this dealing range, but there is a fair value gap on the 4-minute. So you want to stick to that time frame and look for inversion on the 4-minute time frame. And that's when you're going to take your entry. So pretty much this is the entire trading strategy, guys. Really simple. I wouldn't call it a mechanical strategy, but with practice, right, and keeping things simple, identifying your daily buys with no complications, right, and then using the simple entry model. And SMT is not important, it's not crucial, but if you have like a neutral bias, that's when I use it. And that's pretty much it. So let me give you guys some examples and then I'm gonna end the video. All right, so here is example 1, and I'm gonna break down the trade that we took today. All right, so I started on the daily time frame, and the bias wasn't really clear because we were at like all times high on the daily time frame, by the way. And to be honest, nothing was clear here. Yeah, sure, we swept this high, but eventually it was just not clear, right? So I dropped down to 4-minute time frame, okay? And I was looking at these like equal lows over here, like this original consolidation, right? And I was thinking, maybe we sweep this and then we push up. But then something happened, right? And so I'll open up ES, right? And I'm looking at this significant low on the 4-hour time frame. And I'm like, okay, we have SMT divergence with this low over here, right? And now my bias was at this point neutral because I didn't know where price wanted to go. It could drop lower, right? But since I had SMT divergence on the 4-hour time frame, I just knew that we're gonna get like a small push to the upside because I can basically capitalize on that small move. I don't need big moves, right? Especially when I'm trading on like on the 1-minute or 2-minute. So I dropped down to 1-minute time frame here. And first thing first, let's go here. We have SMT with ES on the 4-hour, and I see that we have a fair value gap on 1-minute time frame, right? But as I said before, I want to check the higher time frame. So that's going to be the 2-minute time frame. And we had a fair value gap on the 2-minute time frame as well. So I went to 3-minute time frame. And eventually there was no fair value gap on the 3-minute. So I just went back to 2-minute to look for my trade. Now I simply marked out this fair value gap over here. And let's just go and close this. And let's just go and do this. Okay. So this is the 2-minute time frame. If I turn on my executions, you can see I took a long position here. I took first partial here. And then I was out of the trade at 1 to 1.5 around this auto block over here. Now, one more key rule that you need to know is that if before your entry, the closest liquidity level, which is this high over here, is taken out before your entry. So let's say that this candle never closed here. It wicked above it and then closed. Then I wouldn't take my entry. That setup is invalid. The goal here is to take your trade before market structure shift. Because we're like millions of people are like waiting for a market structure shift. I'm trying to get in as soon as possible so I can go break even at this level. So if price reverses, it never matters for me because I never lose anything, right? So price can just simply push down. So we're leaving everything at probabilities. If it wants to push up from here, well and good. If it doesn't, it's just gonna stop me out. That way, sure, I'm gonna miss some of my trades. Like it can go to as full TP, some of the trades. But it's best, the best thing about you can do like for trading is just protect your capital. So that was pretty simple. 2-minute inversion, 4-hour SMT, right? And I wasn't targeting this high because I knew for a fact that we have like these clean equal lows on the 4-hour. So this could just be a small push. And that's what I capitalized on, right? You don't really need to always have like correct bias. You just need to see if you have SMT on the higher time frame, have you swept some key levels? So we eventually did sweep out this 4-hour swing low, and we also had SMT around that level. So let's move on to the next example. All right, guys, so here is second and last example. So watch very carefully. So coming onto this day, my bias was bearish if we tap into this 15-minute fair value gap, right? And we had this London low over here. So I marked that out. And as you can see, I sent this exact bias chart to the Discord before the market opened. So we were like pretty clear on what can happen, right? So over here, you can see that we have the market open over here. And I was expecting that we'll tap into this fair value gap and then we're going to push up. Now, this is exactly what happened. So if I go onto the 1 minute time frame, you can see that we had a fair value gap on the 1 minute. So I went on to the 2 minute to see if we have a fair value gap, and there were none, right? So I would just go back to 1 minute, stick to that like time frame. And then I noticed we have this fair value gap. So I simply just marked it out. This was my long, right? And I pretty much just went for like, I believe like 1 to 1.5 here, because I was targeting these equal highs up here. My stop was somewhere around here, and pretty much, you know, you really need to scalp out profits, especially on when you're on the 1 minute. And eventually it did just go up after like probably coming back at your break even level. But the point here is that you would have gone like break even at around this high, even though it is very close. But this is the beauty of the strategy, right? And pretty much 1 to 1.5, partial at 0.7, I believe, and then 1 to 1.5 was my full TP. So if you are interested in watching me live trade this exact strategy every single day, there's a link down in the description. Click. This is the first link in the description. Click on it and see if you qualify for it, all right? And watch the video, see if you are a good fit for it, and then join. I'll see you guys in the next one. Take care. Goodbye.